today. So what do all these moves say about the direction for the market? Tim, start us off. We sort of ending the week with tariff worries. We started the week with some tariff rattling, worried first, then relief. What in the heck should we be watching here?
First of all, welcome. It's always great to have you. And we're also ending the week with some disappointing earnings out of the Mag 7, where we kind of feel like we started the week, and certainly where we had some of the week. So although the headlines at the end of the week about tariffs and reciprocal and a lot of the unknown in terms of the economic impact and truly what's going to happen on policy, I feel like the close of this week is as much about what really happened this week in terms of market leadership. Semis closed really at the 200, have been fighting to kind of break back over that. They didn't fall apart. But lack of leadership from Mag 7, for sure. Outside of Facebook, I guess we call it Meta these days, and a little bit else, it's really been a story of that. The fact that this morning's payroll number was a number that didn't tell you that the labor market is bombastic. It didn't tell you that we have runaway inflation, but it definitely brought the unemployment rate down with the participation rate up, meaning this was a real number. This was really to the extent that you could see some tightening from labor forces just because there's more people looking for jobs and overall that the unemployment rate has come down a bit. Wages were stronger. There are some elements of this that say the Fed is absolutely on hold. You've got CPI next week, Humphrey Hawkins. So I think as much as there's unknown around tariffs, you could make an argument this week was relatively positive in tariffs. I'd say the Trump administration is showing that they're kind of being very tactical and certainly using tariffs as a stick from which to see what kind of follow through they can get. I think there's concern about market leadership. I think there's concern about the Fed, and that's what it felt like today.
Yeah, there's so many different things going on, but I love a lot of the points that you make, obviously, with the tariffs potentially as a negotiating tool. I think retailers were really happy that it wasn't more than 10% on China, at least as of right now. Maybe some relief there. Courtney, but Tim didn't mention the University of Michigan. I hate even to say that as an Ohio State fan.
That's not nice.
Consumer sentiment survey. I mean, my gosh, that was really disappointing this morning, much lower than expected. I mean, consumers are the backbone of the economy. Starting to see some worry there?
Yeah, and I think that is something you have to watch, right? I mean, because we are very much a consumer-driven economy. So if the consumer continues to hold in there, that is a good thing. And you've seen these surveys come up and down. I think the bigger thing is what is happening with wages, what is happening with the labor market, and what you saw with the data that came out today. Wages have actually been rising faster than inflation. And you also have this wealth effect where people have actually been spending even higher than their wages, mainly to reflect the fact that assets have been growing. So that's really what's been keeping the consumer strong. The question is that going to crack at some point? And that's what people are worried about and they're waiting for. And that's where they're looking at data like you point out, like consumer sentiment. You're seeing some of that go down. I don't think I've seen it enough in the data of the actual aggregate of the consumer and the economy yet to justify that. But it's something to watch out for, absolutely.
I think the inflation number in there, their expectations that inflation was going to rise to something like 4.3%, which is about 1% higher than previous. That sort of rattled me a little bit to see that. I mean, Steve, Tim makes some points about the Magnificent Seven, kind of the Magnificent One, maybe over the last 2 weeks or so, with Meta being the one outperformer, NASDAQ down more than 1.33%. Do you think that weakness continues as we move into next week?
Yeah, I do. And I wouldn't be buying, I said this last time, I wouldn't be buying Mag 7 right now. And I think you're going to have this race.
Even on the pullback, not an opportunity.
You know, you're always going to get sort of that DeepSeek bounce back in a lot of those names. But if you think about it, DeepSeek is probably more than a one-day event in the thought process, in the psyche of the investor. If you think about that, they can do it for $6 million or thereabouts when Meta is costing them $65 billion, Microsoft $85 billion, Amazon $104 billion. It becomes are they throwing the money away? Or is all of
Even
this...
though Amazon, they were trying so much to reassure, it's going to be worth it. It's the biggest opportunity.
I think that feels like last year, right? So we were all on board last year where who was going to be the first to monetize. NVIDIA was going to be the first to monetize. NVIDIA was 85% market share. But when you look at consumer sentiment that you brought up, 7-month low. Inflation spiking to it spiked the most as far as expectations for a 14-year high.
Right. That's
so those things. But I'm on the other camp where I think tariffs. We're talking about this as inflationary. I think they could be deflationary. It also increases the dollar's value, which makes imports cheaper. It could slow down the economy a little bit, so that's deflationary. And also you get the substitution effect that where, okay, I bought this basket of goods, so I'll buy this basket of goods. So I don't want to say that I'm too rose-colored glasses on this, but I'm looking at it from a different angle.